Hey everybody, and welcome back on the trade recap on EU on the 28th of August. So let's look at the charts. What do we have here on the daily? We had a recent 4H boss, and I will talk about readjusting your swing structure, because sometimes the ranges get so big that in order to keep price action clean and to make things simpler, you definitely can adjust your swing structure. But anyways, we had a daily boss. We are anticipating a pullback into some extreme demands over here, anticipating that price could push up because we are in the bullish leg, or price could melt through and have a break of structure and become bearish, right? So we don't know that yet, and we allow the lower time frames to confirm that. Let's go to 4H. What do we have here? And like I said, on the 4H, the original boss that we had was here. This blue line that you all see here, that's the 4H boss, which makes the 4H swing high over here. And that is a very expansive swing range, right? So there's a lot of corrective price action moving downwards, trickling down. And this is where we are today. So, typically the month of August, there's not a lot of price action. Banks are on holidays, people are on holidays, and there's not a lot of movement. So typically a lot of strategies fail because for strategies to work, price has to move, right? So if you're using anything, supply, demand, support, resistance, SMCs, whatever that you're using, moving averages, you need price to move. If price is bound in a range, it's not moving, what are you going to do? It's sweeping highs, sweeping lows, what are you going to do? So you sit back, relax, chill until there is structure formed. So here's my tip, my recommendation of the day. Master structure, right? You need to understand what price is forming and how it is forming on multiple time frames, right? What is a higher high? What is a higher low? What confirms that? What is trading from a weak leg? What is trading from a strong leg? What does a sweep mean? What is price failing to close above a certain high or low? What does that mean? And how does that relate to a higher time frame and a lower time frame? Because if you master structure, everything else becomes easy, irrespective of what strategy you choose. And like I said, moving averages, supply, demand, support, whatever, price has to print candles, right? And those candles have to move. And in order for them to move, structure is developed in hindsight. So you need to understand how structure develops, because that is one thing that stays consistent, right? The algorithms, if you will, might change. Your strategy might work in some months, might not work in some months. There might be, like we had in the COVID times, some of the strategies completely failed, some worked really well, and it was a completely different pattern because markets were in havoc. We don't know what was happening. The supply chain was stopped, banking was slowing down, right? Everybody was working from home. So during all of that, price was printing candles, right? And if it's printing candles, it's printing structure. So if you understand structure, you can adjust whatever strategy you're doing per the structure, right? So you need to really understand what structure is, and we're going to talk about one of the trades that I took today based around just simple understanding of structure, nothing fancy. It's just analyzing what price is doing, how it's printing, and then taking a trade. Okay, so let's look at this. So on the 4H, like I said, when price becomes so expansive, you can adjust your swing structure, right, to make things simpler. Because trading should be simple, right? If you have a stressful job and then you are on top of that taking one of the most stressful things that you can do is trading, right? So why would you pile up stress upon stress on yourself? So you need to keep trading simple and effective, and by including so many things and indicators and different strategies, and this will work and that will work, and trying it out, just put it all aside, make it simple, make it as fundamental as you can be. And by sticking to the roots, sticking to fundamentals, and just applying your knowledge on the fundamentals, you will have a profitable strategy, right? You will have a profitable edge on the market if you're consistently executing it. So having said all of that, let's come back to the charts. Okay, so what do we have here? Like I said, we have the last 4H swing break of structure here. We have the high way up here. Let me just show you again, right there. And we are right now at this price action. So let's expand this. What do we have here? So because the price has been printing really clean internal structure, what I decided was, let me just call this a 4H boss. Let me just call it 4H swing high, and then see what price does. So if it falls down, we have a new supply zone. If it starts creeping up, it'll develop a new demand, right? So let's see what it does. So I came to the charts. Let's say 20 right here. So this is where I'm looking. Look at this, right? I mean, nothing is happening. You have just a mass, just a range. Look at these candles, and these are 4H candles, right? And I trade London Open. Sometimes I look into New York, but primarily my trading session is London, yeah, nothing is happening. If price is doing this, what are you going to do, right? But if you understand structure on the lower time frames, you could possibly take advantage of this. So at this point in time, what do we have here? We had a break of structure. We had a massive push down. What did that leave us? We have a nice supply at the extreme over there, the pivot candle, and we had a reaction from this demand here. Now, typically, on the chart, on the time frame that you're looking at over here, if there is no leg inducement over here, so there is no liquidity for the pullback to grab. If there is no structure developed right at the demand and it's just a straight push, more often than not, this zone is weak and it will fail, right? So it will definitely give you a valid reaction, but after that reaction, it will fail, right? And I've experienced this many, many times where you'll have this one big expansive candle, bullish candle or a bearish candle right after a small opposite colored candle. It'll create a very nice supply demand and it'll just fail with the reaction, right? So we had a push down, and right now we are just trading between this range, okay? So let's look at 15 minutes to see really what's going on. Okay, so with the 4H structure, because it was fairly tight, I marked my 15 swing high also over here, because it was very, very clean. Last massive break of structure was here on the 15-minute. That will make my high. And we are looking at this big push down and then a pullback. It never closed below this low. So this low is still the weak 15-minute swing. All it did was just maybe grab liquidity over here and then pull up. But if price went all the way up like this and broke this low, I would have considered this as a break of structure, and this would have been my 15-minute swing high. But since it did not break the low of this, this for me is not a swing structure break. The price is contained within this this expansive swing structure, and we are within this, right? Okay, so price, I believe, had some news events over here, came nicely to the supply, rejected, and then trickled back up. So if you look at this range here, if I were to draw my premium and discounts, 50% would have been here, and it did go all the way back up, and then it came down. And this was on the 28th Asian session range. This is my 15-minute internal strong, right? And this would have been both my swing week and my 15-minute internal week, right? So the swing structure is what? The swing structure is bearish. The internal structure, 15-minute, is bearish, which is a good sign. So we have internal aligned, we have the swing aligned, but look at this. We have another structure forming, which is internal of the internal. And yes, it could get a little tricky and it could get a little messy, but you need to grab or wrap your head around this. Because the way we mark structure is very clean, right? If you have a break of structure, the lowest point is your weak area, and then you wait for a pullback. I cannot be marking every single low over here as my break of structure on the internal, because if my internal is high here, the lowest point is where? It's here, right? So I cannot just break those rules here. So what happens now? Price is creeping up slowly, and it is forming this internal structure within the larger internal. So if you want, you can, just to make things easier and understandable, you can call this your swing structure, you can call this a swing weak, swing strong. and you can call this your internal structure, right? For me, that was the swing. This is the larger internal, and then we have the smaller internal going up like this. When it broke this high, we have what? We have bullish internal of the internal, we have bearish larger internal, and we have bearish swing structure. So what is the most highest probable trade? Because this internal structure can continue creeping up until it doesn't, right? So we are not trying to anticipate what is going on in the market. We are trying to see what the market is showing us and then making our decision based on the confluences that we gather. That's our job. So if we had this internal break of structure, and now we are looking at first signs of chalks and first signs of maybe the price will turn bearish, maybe, right? The first sign is given to us, maybe the internal of the internal will turn bearish, right? Which means then the internal, the smaller internal, the larger internal, and the swing internal will all be aligned in the same direction, which is going down, which is bearish. And that would be the most highest probable setup, because all time frames, all structures are completely aligned, right? So when I came to the charts, what are we looking at here? So it created a nice sweep zone over here. So it swept all of this liquidity, and then it broke down aggressively. I had a POI marked here, a 15-minute POI here, and a 15-minute POI here, right? So, both of these POIs, if you noticed, swept some liquidity behind them, right? And there was and then there was an aggressive push, right? So I was waiting to see how price develops here. Nothing happened. Boom, it went all the way down. I was anticipating to see how price develops here. Nothing happened. It breaks it down, right? So for me at this point in time, what is it telling me? My swing structure is bearish, which is the actual 15-minute swing. My larger internal structure is bearish, right? And now my internal, the small internal structure was bullish, and it stays bullish until this low goes, correct? Because if this was the structure that broke internally, the smaller internal, this would be the lowest point that broke the structure. So that is my range for the small internal. So unless this doesn't go, I am not completely rule-based wise, haven't turned internally structure into bearish. It can keep creeping up all the way. It might have a new break of structure, which means we'll have a new low, and then maybe it breaks that. Who knows, right? But once this low goes, this strong low goes, then we are completely aligned with the three different structures that we have here. But what is it telling us right now? That it broke this low, and it broke this low, which was supposed to be strong, right? Because if the bullish order flow is continuing, these demand zones should have held. And specifically this one, because it had some inducement, so it did tap into it, go. So if price is coming back, it grabbed some liquidity over here, and then it should have gone up, right? But it didn't, it failed. And once it failed, it started creeping up, and I marked my 15-minute supply zone over here, right? And waiting how price reacts once it goes into the supply zone. Why again I did this is because at this point in time, my swing, my larger internal are bearish, my small internal is bullish, but the small internal has broken this low and this low, too strong, at least in reference to the smaller internal demand zones. And it could give me the first indication that the price is ready to turn bearish also in the internal, and maybe take out this low over here, which is why I marked this. Again, I did not place a risk entry here, because if I did place a risk entry here, I would have been stopped out. So I was anticipating to see what the price does here. So let's go to the 1 minute. Where were we? Okay. Now, actually, let me just go back one more time to show you something here. Okay, so when this supply zone was formed, how did it form, right? It swept liquidity, which means it's a decent enough thing. And it very aggressively gave us a V-shaped reaction, which is a good sign, right? It left us some imbalance as well over here, which is another good sign, right? And there is also one more point. There is no liquidity over here to grab, right? So there is no inducement in the leg. So inducement would have meant that if price came in like this, went up a little bit, came in like this, that high would have induced a lot of people who would have shorted from there, but that did not happen. So when I don't have any sort of inducement in the 15-minute leg, let's say, when price pulls up to the supply zone, then I would need to see strong liquidity being taken out, right? Because strong liquidity is the reason why market moves. Large institutions or whatever you want to call it, big money, uses strong liquidity to then drive prices in either direction, right? So we need to look for liquidity. To move market, you need liquidity. It's like fuel to a car, right? The car will not move unless you don't have fuel. Markets don't move unless there's no liquidity there, right? So let's go down to 1 minute. What do we have here? Okay, so here price is creeping up, right? I don't have any 15-minute lid over here. So for me, all of this I'm just blind to. I'm not marking this high, oh, it took liquidity. I'm not marking this high, it took liquidity. I'm doing none of that, right? All I'm focused is in this price action on how it's developing. So for me, okay, so let's come to that point later, but let me explain all of these candles. When price came up here, right, what do you see? The price is just gradually pulling up, right? Gradually pulling up. There is nothing that tells me that strong liquidity is taken, right? Because anything that is sitting above here is not strong liquidity, it's weak liquidity because the price is trending up. This is low, weak highs, right? This is a weak high. This is a strong low. 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 So strong liquidity sits behind strong lows in this case. Now, for example, if price moved up like this, right? Strong low, it broke this right here. Let me see if I can make this work. Price goes up like this. It breaks this at this point. Now there is strong liquidity here, right? Because this high was responsible to take out the strong low. Then if price comes up over here, this is when I call my liquidation has been done, okay? So let me get rid of all of that. Same thing over here, price just creeps up, goes down, creeps up, weak liquidity, I'm not interested, right? Now, where is the next most possible or probable strong liquidity is sitting? At the edge of the POIs, right? So this high was responsible for breaking this low, and then it was also the highest point that created all of the structure downwards, right? So there is definitely strong liquidity sitting here, 100%, right? So when price was forming coming into my POI, what did I notice? I noticed that it swept and it failed to close above, which means that it could be a sweep of liquidity, right? Because it is strong. And then I was looking at the formation of the candles and see how it formed here. Let me go back to my crosshairs. So see how it formed here. It went up, did not close above, failed, it swept in, and the next candle closed below, right? So how would I classify this? That it was a sweep of liquidity and not just internal order flow staying positive, right? How do I do this? I do this when price fails to create a higher high and breaks the demand zone that was responsible for taking out this liquidity over here, okay? So when price went up, this was a demand zone, a fractal demand zone that was created. How do you know this is a demand zone? Because when price came down, it had a nice reaction of it, came back, it had another reaction, it swept the liquidity over here. and then it failed, right? Now, when I was looking at this on my MT5, you could see here that this wick and this wick are equals. So at this point in time, I haven't had a chalk yet, a change of character, right? So if I were to strictly look at this chart, I would not have taken the straight because my chalk hasn't happened yet. This candle right here would have been, this black bearish candle here would have been responsible for taking out this low, which means that the chalk has now happened, and I would have entered at maybe this pivot candle or taken the whole range, and in that case I would not have been tagged in to my trade. But on the MT5, because of different feeds, this candle, this wick of this bearish candle did break this 1 minute chalk. And after I saw on my MT5 that this has been broken, then I quickly placed a trade from the low of this candle, which created the reaction, kept my stop loss up to the high, because there was really no place else structure-wise where I could have placed it, and this is the protected high in that case, right? So if this goes, everything goes. The whole bias is wrong, right? So I got tagged in, price went up, took some liquidity, and then it melted, right? And I went break even. As soon as I got tagged in, I got break even, and when price fell, it never came back to my entry. And you would have easily made what, a 4R on this trade. Yeah, it went to 4R, but I did not catch that entire move. I closed it fairly early. I believe it was a little over 2R when I closed it. So how did I capture this trade? So if I go back to 15 minutes, and I just want to make sure that I go over this again to help you understand the importance of understanding how structure develops, and how do you take advantage of this. What do we have here? We have a larger 15-minute swing structure, which at this point is what? Bearish. We have a larger internal structure, strong high, which is what? Bearish. We have the internal structure, which is maintaining the order flow. This internal structure, I'm waiting for it to switch bearish. Then I have my swing structure, my larger internal, my small internal, all aligned to take out this low at that point in time. I will look at a 15-minute supply zone, which is high probability in a good area, and then maybe take a risk entry because everything is aligned, right? You just want to get involved at that point in time. But I did not get this swing, and I still got involved is because price was giving me indications that it is now breaking structure. So internally, it broke this structure here, broke this structure, broke this demand zone. And the way this POI was formed is by a sweep of all of these highs and then aggressively pushing down. I did not take a risk entry on this 15-minute POI. I waited for price to move in. And it is much, much more clearer if you look at the 15-minute that it was nowhere close to even closing by the boundary of that POI, right? It really swept and traced back heavily. Then I moved into my 1 minute. I looked at the last demand zone. So I come back here. I look at the last demand zone that was responsible for taking out this liquidity. If the price was going to continue moving upwards, this demand zone should have held and would have created a new higher high, but it fell. And everything below that was sort of, there was a fair value gap that I knew was going to get filled. A lot of fair value gaps here. Everything is mitigated below. It's a sweet trend line liquidity. Fair value gaps here, you know they're going to get filled. This is the most least resistant area that the price can fall to because there are no orders here. It's just falling. And that is exactly what you see in this price action. Okay? Hopefully that made some sense on how important the understanding of structure is. If you have any questions, concerns, doubts, let me know and I'll try my best to answer. Take care, guys. Bye-bye now.